Hey, Kyle, it's good to see you. As you know, this Fed rate hike has roiled the markets again. Markets fell following the Federal Reserve's 75 basis point rate hike. There was talk it would be 1%, but this is less than that. What do all these numbers even mean?
Right. So we talk about these things often, and we probably hear about them a lot in the media:
Mhm.
inflation, interest rates, rate hikes, excuse me, unemployment. But what are rate hikes, and what is the federal funds rate? Right. So really, that's just the rate at which banks lend to each other overnight. It's also been referenced to as an overnight rate. Right. So um, really, what this does is it kind of sets the bar for lending money and money availability for both businesses and consumers. What it all when the Fed raises rates, it also does another thing that we may not be familiar with. It increases how much these banks have to keep in reserves. So ultimately, when they raise rates like this, they're trying to cool off the economy. They're trying to make it more difficult to access money. And in turn, what that should do is make it more difficult for people to go out and buy goods and services, right? Because that's really what's creating our big inflation problem post COVID after all of that stimulus.
Right, right. Okay, so I want to take another look at something that is rather stressful to look at, the S&P for the past month. And we look at so much red on the board. Kyle, what's behind this pessimism that we're all feeling?
I know it's we had a little breath of fresh air in July, it felt like, and then we're back to it, right? These new lows that we're testing. And to me, really what's behind the pessimism is the speed of the rate hikes that we're seeing. This visual right here, look at the yellow line, right? That's this year, 2022. And we have raised rates so high, so fast that it's unlike any other time in recent history, right? Look at the pattern, how many weeks it's taken to get just to the point that we're at today. And based on what the Fed is saying, the Federal Reserve is saying, we're not done, right? So we could be up north of 4% on that overnight or Fed funds rate by the end of the year if we don't see the inflation numbers start to tick down, see that evidence that these tools and strategies are working to really slow down this inflation problem that we're feeling.
Okay. Well, Kyle, one more thing that I wanted to talk about. The reason behind all these rate hikes is it's meant to cool inflation, right? We were hoping that would happen. It kind of hasn't. Take a look at the CPI again, recently at 8.3%. So, since these rate hikes aren't necessarily doing their job, can we expect more interest rate hikes?
Well, look at that chart that you have right there, right? Look at the 70s and 80s. Look at those high peaks, right? Those are times that clients of ours remember very well. You
Yeah.
know, mortgages were insane. You're paying north of 10, 15% on your mortgage, but you were also getting a bank CD that was paying you something close to that. But those were periods of rampant inflation, and we were too slow to tackle the problem. I think that's a lesson that as a country, I think we've learned. No one wants to relive that period of history. And I think that's a reason why the Fed is raising rates so hard and so fast. They understand it's going to create economic pressure, but it will work, right? So essentially, this is something that we've seen in the past, and the interest rate hikes are going to tackle that problem. But the problem is, it takes at least 6 months for these rate hikes to get down to the consumer level for us to see and track. So we started going from 0% interest rates to 0.25. We went really slow in the beginning. That's not going to have a material change or a real impact on inflation. That's going to take time. And the more aggressive rate hikes really began around June, right?
Hmm.
That's the 6th month of the year. So from our perspective, if we're eyeing a potential turnaround point or an area where the Federal Reserve takes their foot off the gas at least a little bit, it's closer to December in our eyes.
Okay. Okay. Good to know. So, what are the smart money moves that investors should be considering right now?
I think the smartest thing you can do right now as an investor is simply take a step back, take a deep breath, and understand what is going on and see that these are problems that we've dealt with in the past. Although the ancillary circumstances may be different, we've seen high inflation in the past, and we've used the same exact tools that we're using today to tackle that problem. Let's flash back to COVID real quick, right? 2020, when that happened, we saw a huge market dip, 30% plus in what felt like 30 to 90 days, somewhere in there. We had trading halted on multiple days of the stock market. And it was a really uncertain time for everybody because we hadn't seen a pandemic of that scale probably since the Spanish flu in the early
Right.
1900s. So
Mhm.
these are problems that we've seen, the inflation problems in particular. They're problems that we've seen in the past, 70s, 80s. I think the Federal Reserve is using that as a base case and understanding what happened there and learning from the mistakes they've made in the past to make sure we don't make those mistakes today. So
Mhm.
with that being said, there is obviously a point where markets will stabilize again, where growth outlooks will normalize again, right? And investors will be incentivized to just, I think the ones that will win out the most are the ones that stay patient and understand the situation.
Mhm. And Kyle, as you and I were talking offline, as stressful as it is for all of us to look at our portfolios right now, you, as the industry expert, you have planned and prepared and built this kind of volatility into everybody's portfolio.
Exactly. It's part of our retirement planning process.
Yeah.
We account for volatility, right? It's going to happen. We don't know when, but here we are. We're in the middle of this. So everything that we do is all revolving around building in some protections for our clients
Right.
inside of their plans to deal with problems just like this.
Yeah. Yeah. And we just need to hear it to make ourselves feel better. At least I do. It does always help. Kyle, if somebody has any questions about what we talked about today, what's the best way to reach you?
Best way to reach us is through our website, firstcoastfinancialgroup.com.
All right, Kyle, thank you.
Thank you, Erin.